Hello students and welcome to the lecture. So students, as we know that we are covering the banking awareness practice questions, right? And this is going to be a part 8. In this lecture, we will practice some questions and then we will look upon the summary of these questions, right? But before proceeding further, we have a small disclaimer presented over here. And the disclaimer we are required to understand before we proceed further. The disclaimer is the images used in a slide deck are for educational purposes only. We respect the intellectual property rights of the original creators and owners of these images. If you are the owner of any of the images used in this deck and have any concerns or issues, please contact us at sathee@iitk.ac.in and we shall remove the images. So let's begin with the first question. What is the maximum amount insured under the deposit insurance? Rupees 1 lakh, rupees 2 lakhs, rupees 5 lakhs, rupees 10 lakh, none of these. To answer this, you will have a time period of 10 seconds, then I will give you the answer. So your time starts now. Okay, the time's up. Correct answer is C, rupees 5 lakh. Just go by the explanation. Under the deposit insurance scheme of DICGC, stand out for Deposit Insurance and Credit Guarantee Corporation. In case of bank winding up, the depositor will receive up to rupees 5 lakhs against his deposited amount. Like you can say, if there are someone, okay, and he has deposited some amount in the bank. In case the bank got, you can say bankrupt and winding up its business. So the depositor who had deposited the amount, he will receive at least 5 lakh rupees against his deposited amount. For example, if he had deposited rupees 10 lakhs and the bank got bankrupt, so he will receive only 5 lakhs. Okay. And if he has deposited rupees 2 lakh, which is lower than the 5 lakhs, then he will receive entire amount. But if the amount is more than 5 lakhs, then up to 5 lakh he will receive as a insured amount under the deposit insurance. Got it? Now, question 2. Which among the following come under the priority sector loans? Agricultural and allied activities, education loans, retail trade loans. Options are only 1 and 2, only 2 and 3, only 1 and 3, 1, 2 and 3, none of these. To answer this, you will have 10 seconds. Then I will give you the answer. Your time starts now. Okay, the time's up. So the correct answer is D. 1, 2 and 3. It means agricultural activities, education loans and retail trade loans. All these comes under the priority sector loans or PSL category. Just go by the explanation. We could say priority sector loans given to the essential and needy sectors as per the Reserve Bank of India's instruction to the banks. Priority sector comprise sectors like agriculture and allied sector. MSME stands out for micro, small and medium enterprises, education loans, renewable energy loans, etc. So that's why these three considered in the priority sector loans. Question number 3. Not negotiable written on a check crossing means the check must be paid into a bank. The check is not presented by anyone other than the pay. The check could not be paid anyone but the pay. Check could be paid to anyone, none of these. To answer this, you will have 10 seconds, then I will give you the answer. So, your time starts now. Okay, the time's up. Correct answer is B. The check is not presented by anyone other than the pay. Go by the explanation. A not negotiable crossing on a check removes its negotiable status, meaning the transferee could not hold the title of the check. However, the check remains transferable. While it appears like a regular check, it could not be cashed or deposited under any circumstances. Okay. Question number 4. For Mr. Krishan to be holder in due course, which among the following conditions must be satisfied? The negotiable instrument must be in possession of Mr. Kishan. He must be holder of valuable consideration. He must become a holder of the negotiable instrument before the date of maturity. He must become a holder of the instrument in good faith. So out of this, which options are correct? Option 1 and 4. Option 3 and 4. Option 2, 3 and 4. All follows. None of this. To answer this, again you will have 10 seconds, then I will give you the answer. So your time starts now. Okay, the time's up. The correct answer is B, all follows. Just go by the explanation. To determine if Mr. Krishnan qualifies as a holder in due course or HDC of a negotiable instrument, we need to evaluate the given conditions. The criteria for being a holder in due course typically including the instrument must be in the possession of possession of the holder, means Mr. Krishnan. Second, holder must have acquired the instrument for valuable consideration. Third, the holder must have taken the instrument before it was due, before the date of maturity. Fourth, the holder must have taken the instrument in good faith. Okay. Question number 5. Which among the following is not a correct feature of promissory note? First, promissory note must be in writing. Second, promissory note must contain an undertaking or promise to pay. Third, promissory note must be conditional. Parties to promissory note must be certain. None of these. To answer this, 10 seconds you will have. Time starts now. Okay, the time's up. Correct answer is promissory note must be conditional. Just go by the explanation. To determine which option is not a correct feature of the promissory note, let's review the characteristics of a promissory note. First, must be in writing. This is true. A promissory note must be written document. Second, must contain an undertaking or promise to pay. This is also true. The core feature of a promissory note is the promise to pay a specified amount. Third, must be conditional. This is not correct. A promissory note must be unconditional. It could not be contingent upon any other event or condition. Fourth, parties to the promissory note must be certain. This is true. The parties involved must be clearly identified. Consider the following statement in context of holder in due course. If Mr. I obtained the negotiable instrument before its maturity, if Mr. I obtains negotiable instrument by way of gift, if Mr. I obtains by some illegal method, if Mr. I doesn't obtain it bona fide. In which among the following statement, Mr. I is not considered to be the holder in due course? Options are 1 and 2, 2, 3 and 4, 1, 3 and 4, all follows, none of these. To answer this, again you will have 10 seconds, then I will give you the answer. So your time starts now. Okay, the time's up. Correct answer is B, 2, 3, and 4. Let's go by the explanation. To determine in which statement Mr. Roy is not considered a holder in due course, let's analyze each statement again based on the criteria for HTC. First is, if Mr. Roy obtains the negotiable instrument before its maturity. This condition qualifies him as an HTC, so this statement does not disqualify him. Then, if Mr. Roy obtains the negotiable instrument by way of gift, an HTC must acquire the instrument for valuable consideration. Receiving it as a gift does not meet this requirement, so this statement disqualifies him. Third, if Mr. Roy obtained by some illegal method, an HDC must obtain the instrument in good faith and without knowledge of any defects. Obtaining it through illegal means disqualifies him. Fourth, if Mr. Roy doesn't obtain it as a bona fide, this disqualifies him as an HDC, as good faith is a requirement. So based on the analysis, the statement in which Mr. Roy is not considered a holder in due course are Statement 2, gift. Statement 3, illegal method. Statement 4, not obtained bona fide. Question number 7. In which of the following types of account, fixed amount has to be deposited over a fixed interval of time? Savings account, current account, recurring deposit account, term deposit, none of these. To answer this, you will have 10 seconds, then I will give you the answer. So your time starts now. Okay, the time's up. Correct answer is C, recurring deposit account. Just go by the explanation. Savings account. These accounts allow you to deposit and withdraw funds freely, but it does not require you to deposit a fixed amount at regular intervals. Current account. Typically used by businesses, this account allows unlimited deposits and withdrawals without any fixed amount required. Recurring deposit account. This account is specifically designed for individuals to deposit a fixed amount of money at regular intervals, usually monthly, over a specified period. It encourages saving by requiring consistent contributions. Term deposit. This type of account involves depositing a lump sum amount for a fixed term at a specified interest rate, does not require regular deposits at intervals. Question number 8. Which among the following are examples of recurring deposit? Home safe account, sickness deposit account, home construction deposit scheme. Select the correct option from the codes given below. First is only 1 and 2. Second is only 2 and 3. Third is 1 and 3. Fourth is 1, 2 and 3. Fifth is none of these. To answer this, again you will have 10 seconds. Time starts now. Okay, the time's up. Correct answer is D, 1, 2 and 3. Just go by the explanation. A recurring deposit is a type of term deposit offered by a bank that allows individuals to deposit a fixed amount of money every month for a predetermined period. At the end of the period, the individual receives the principal amount along with the interest earned. This type of deposit is ideal for individuals who want to save regularly and earn a higher interest rate compared to the regular saving accounts. For example, home safe account, not typically a term used to describe a recurring deposit. Home safe account might refer to a saving accounts or a type of account where individuals could save money for home-related expenses, but does not necessarily involve regular monthly deposits of fixed amount. Sickness deposit account, also not a standard term for a recurring deposit, might refer to a special saving account designed to cover medical expenses, does not fit the definition of a recurring deposit where fixed monthly deposits are made. Home construction deposit scheme. This could potentially be a type of recurring deposit if it involves making regular monthly deposits for a fixed period to save for home construction. However, without more specific details, it is difficult to definitely categorize it as a recurring deposit. If the scheme requires fixed money contributions and offers interest on the accumulated amount, it could be considered a recurring deposit. Then question number 9. Which among the following are correct statements about demand deposits? Money in demand deposit is liquid. All demand deposits earn interest. Ownership of demand deposit could be transferred using a check. Options are only 1 and 2, only 2 and 3, only 1 and 3, 1, 2 and 3, none of these. To answer this, you have 10 seconds and I will give you the answer. Time starts now. The time's up. Correct answer is C, only 1 and 3. Go by the explanation. To determine which statement about demand deposit is correct, let's analyze each statement. First is money in demand deposit is liquid. True. Demand deposits such as those in checking accounts could be easily accessed and withdrawn on demand, making them very liquid. All demand deposits earn interest. False. While some demand deposits account do not earn interest, like certain checking accounts or high yield saving accounts, many traditional checking accounts do not earn any interest. Therefore, this statement is not universally true. Third, ownership of demand deposit could be transferred using a check. True. Demand deposits could be transferred from one person to another using a check, which is a common feature of such accounts. Question number 10. Which among the following is not a feature of saving accounts? Preferred by individual savers, usually low scale transactions, earn interest, has overdraft facility, none of these. 10 seconds, time starts now. Time's up. Correct answer is has overdraft facility. Go by the explanation. Preferred by individual savers. This is true. Saving accounts are designed for individual savers who want to set aside money for future use. Usually low scale transaction. This is also accurate. Saving accounts typically involve smaller, more frequent transactions rather than large amounts. Earn interest. Saving accounts do earn interest on the deposited amount, which is one of their primary features. Has overdraft facility. This is not a standard feature of saving accounts. Overdraft facility is more commonly associated with the current accounts where account holders could withdraw more than their account balance. None of these. This option will automatically incorrect if option D is correct. Question number 11. Which among the following is opened in foreign currency only? NRO account, NRERA account, FCNR account, FARN account, none of these. 10 seconds to answer. Time starts now. Time's up. Correct answer is FCNR account. Go by the explanation. NRO. Non-resident ordinary account. This account is primarily for non-resident Indians to manage income earned in India, and it could be opened in Indian rupees. An RERA account. This is not widely recognized and may be a mix-up. It does not pertain to a specific type of foreign currency account. FCNR account. Foreign currency non-resident account. This account is specifically designed for non-resident Indians to hold deposit in foreign currency. Therefore, it is opened in foreign currency only. FARN account. Not standard in banking and may refer to something specific but is not commonly used in the context of foreign currency accounts. None of these. This option is not applicable since FCNR is indeed opened in foreign currency. Question number 12. The head of the Reserve Bank of India is officially known as President of RBI, Chief Executive of RBI, Managing Director of RBI, Executive Director of RBI, Governor of RBI. To answer this, you will have 10 seconds. Time starts now. Time's up. Correct answer is E, Governor of RBI. Go by the explanation. The head of the RBI is called the governor due to the historical and traditional reasons, which are rooted in the establishment and evolution of central banking system, particularly those influenced by the British colonial administration. First is historical influence. RBI got established in 1935 during British rule in India. The structure and nomenclature of RBI were heavily influenced by the Bank of England, which also uses the term governor of its head. The British colonial administration often replicated their own institutions and terminologies in their colonies. Second, British banking tradition. In the British banking system, the head of the central bank, the Bank of England, is called the governor. This tradition was carried over to the India when the RBI was set up. The term of use of the governor reflects the continuity of this tradition. Colonial legacy. Many institutions in former British colonies retain the title structure established during colonial rules. The RBI, being a key financial institution set up by British, continued to use the term governor for its head even after India gained independence. Global practice. Term governor, commonly used in many countries for the head of their central bank, includes not only the Bank of England but also other central banks around the world. It has become a widely accepted term in the context of central banking. Authority and responsibility. The title governor conveys a sense of authority and responsibility. The governor of RBI has significant powers, responsibilities in managing the country's monetary policy, regulating the banking sector, ensuring financial stability. Okay. Question number 30. An engineer working in a big city in India wishes to send some money to her parents in small village. How can a bank help him or her? Both of them have accounts in the branches of the same bank. By issuing a demand draft, by opening a letter of credit in the name of her fathers through e-transfer. Options are only A, only B, only C, both A, B, and both AC. To answer this, we have 10 seconds. Time starts now. Correct answer is E, both A and C. Go by the explanation, demand draft. The engineer could request a demand draft from the bank, which could then be sent to the parents. A demand draft is a secure method of transferring money and often used when sending fund across distances. Letter of credit. A letter of credit is typically used in international trade to guarantee payment to seller. It is not suitable for simple personal transfer of funds between individuals, especially within the same country. E-transfer of money. The engineer could also use electronic fund transfer service provided by the bank like NEFT, RTGS, or IMPS to send money directly to the parent's bank account. This is a quick and efficient way to transfer money. Question number 40. Which of the following is the central bank of our country? State Bank of India, Central Bank of India, National Bank for Agriculture and Rural Development, Reserve Bank of India, none of these. Again, you will have 10 seconds. Time starts now. Time's up. Reserve Bank of India. Go by the explanation. The Reserve Bank of India, Central Bank of India, established in 1935, plays a crucial role in the Indian economy, including the regulation of the financial system, issuance of currency, managing monetary policy. RBI responsible for maintaining financial stability, overseeing the banking sector, acting as a banker to the government. Other options listed are not central banks. First, State Bank of India, commercial bank and one of the largest public sector banks in India, but it is not a central bank. Central Bank of India, also a commercial bank, not the central bank. National Bank for Agriculture and Rural Development, NABARD. This institution focuses on providing credit and developing financial institutions in rural areas, particularly in agriculture, but it's not a central bank. None of these. Since the RBI is indeed the central bank, this option is incorrect. Thus, Reserve Bank of India is the correct answer as the central bank of the country. Go by the question number 15. India has different categories of commercial bank. Which of the following is not one such category? Private banks, commodity banks, nationalized banks, cooperative banks, foreign banks. 10 seconds you have to answer. Time starts now. Time's up. Correct answer is B, commodity banks. Go by the explanation. In India, the commercial banks categorize into the several types based on their ownership and nature of their operation. Main categories of commercial banks in India including: first is private sector banks. These banks that are owned by the private entities or individuals, example including HDFC, ICICI, Axis Bank. Community banks, not recognized category of commercial banks in India. Banks typically refer to banks that deal primarily with commodities trading and financing, but not a standard category under the Indian banking system. Nationalized bank, that were once privately owned but were taken over by the government. Examples like SBI, PNB, and Bank of Baroda. Cooperative banks, corporate societies that provide banking services to their members only, owned and operated by their members who are also their customers. Examples are Saraswat Bank and Cosmos Bank. Foreign banks, banks are based in foreign countries but operate in India, like Citibank, HSBC, Standard Chartered Bank, and other. So, community banks is the right answer. Question number 16. Government of India these days is very keen about the credit to the rural people. Which of the following project launched by the banks to provide loan credit to the farmers quickly? Kisan Vikas Patra, Indra Vikas Patra, Kisan Credit Card, National Savings Schemes, all of these. To answer this, you will have 10 seconds. Time starts now. The time's up. Correct answer is C. Kisan Credit Card KCC. Go by the explanation. The KCC is specifically designed to provide farmers with quick access to credit. Launched by the Government of India, this scheme aims to meet the short-term credit needs of farmers for agriculture purposes, such as purchasing seeds, fertilizers, and other inputs. KCC facilitates timely financial support, helping farmers manage their expenses effectively. Kisan Vikas Patra encourages individuals to save money but not providing credit to farmers. Indra Vikas Patra, saving instruments aimed at individuals for long-term savings. National Savings Scheme primarily focuses on promoting savings rather than providing immediate credit for agriculture activities. All of these. The option is incorrect because not all listed products related to the providing quick loans to the farmers. Question number 70. Which are the following terms not related with the banking operations? Current account, exchange rate, investment rate, domestic saving accounts, veto power. To answer this, 10 seconds you have. Time starts now. The time's up. Correct answer is veto power. Explanation. Current account is a bank account, allows for frequent transactions including deposit and withdrawals. Exchange rate, rate at which one currency could be exchanged for another, crucial for international banking and trade. Investment rate, interest rate, bank offers investment products, important for customers looking to invest their money. Domestic saving rate refers to the percentage of income that households save, which affects bank ability to lend and invest. Veto power, however, refers to the authority to reject a decision or proposal commonly associated with the legislative or government's context, not specifically with the banking operations. So, veto power is the correct answer. Question number 18. Loan taken by a small farmer will be considered a loan for agriculture purpose by a bank. Purchase of tractor, purchase of seed, purchasing of gold for marriage of daughter. Only A, only B, both A and B, C, only C, none of these. Again, you will have 10 seconds. Time starts now. Time's up. Correct answer is only C. Go by the explanation. Loans taken by small farmers only considered as agricultural loans when it's taken for buying inputs for agriculture usage. If it is taken for any purpose other than agriculture, then it is known as non-agricultural loan. Question number 19. The National Stock Exchange is located in New Delhi, Mumbai, Kolkata, Chennai, Bangalore. To answer this, you will have 10 seconds. Then I will give you the answer. Time starts now. The time's up. Correct answer is B, Mumbai. National Stock Exchange of India is headquartered in Mumbai, established in 1992. One of the largest and most advanced stock exchanges in India, plays a pivotal role in the Indian financial market. Facilitates the trading of a variety of financial instruments, including the equities, derivatives, and debt securities. Mumbai, being the financial capital of India, hosts several major financial institutions, including the NSE, BSE, and various banks and financial services companies. Question number 20. Bank's fixed deposit referred to as a term deposit, saving bank deposit, current deposit, demand deposit, home saving deposit. To answer this, 10 seconds you have. Time starts now. Time's up. Correct answer is A, term deposit. Go by the explanation. A fixed deposit is a type of investment account offered by a bank where customer deposits a lump sum amount for a fixed tenure at a predetermined interest rate. Commonly refers to a term deposit because the money deposited for a specific term or duration during which it could not be withdrawn without penalty. Otherwise, all these others are not as fixed as the term deposit. Question number 21. Banks mandatory lending to farmers for agriculture, micro and small enterprises and other weaker sections wherein bank are required lend up to 40% of the loans, generally described as para-banking, sub-prime lending, retail banking, non-priority sector lending, priority sector lending. 10 seconds you have. Time starts now. Time's up. Correct answer is E, PSL. Okay. So we have already talked about the PSL in the beginning. So we will just move forward. Question number 2. Aadhaar Enabled Payment System, EEPS, is a banker model that facilitated banking facilities through banking correspondence across banks. However, Aadhaar-enabled basic types of banking transaction do not include Aadhaar to Aadhaar fund transfer, small order faculty or facility, cash withdrawal, balance inquiry, cash deposit. 10 seconds, time starts now. Time's up. The small overdraft facility. Go with explanation. The AEPS allow users to perform basic banking transactions using their Aadhaar number through banking correspondence. The basic type of transactions that could typically be performed through AEPS including Aadhaar to Aadhaar fund transfer. Users could transfer money between Aadhaar linked accounts, cash withdrawals, withdraw cash from their accounts using their Aadhaar number, balance inquiry, check their account balance using Aadhaar, cash deposit, and others. Question number 23. Which of the following is a receipt listed in India and traded in rupees declaring ownership of shares of a foreign country? IDR, EDR, GDR, ADR, Luxembourg, deposit receipt, LDR. 10 seconds you have. Time starts now. Time's up. Correct answer is IDR. The IDR is a financial instrument allows investors in India to invest in shares of foreign companies denominated in rupees and represent ownership of a specified number of underlying foreign shares. Traded on Indian stock exchanges, making it easier for Indian investors to gain exposure to foreign companies without having to deal with the complexity of investing directly in the foreign stocks. Question number 24. A bank without any branch network that offers service remotely through online banking, telephone, mobile banking, and interbank ATM network alliances known as Universal Banking, Indirect Bank, Doorstep, a Direct Bank, Unit Bank. 10 seconds, time starts now. Time's up. Correct answer is a Direct Bank. Operates without any physical branch network, offers service primarily through digital channels like online banking, mobile banking, telephone banking. Focus on providing a streamlined banking experience with lower operating cost, often passing the savings on the customers to in form of higher interest rate on deposits or lower fees. Question number 25. A type of fraud wherein criminals use an innocent person details to open or use an account to carry out financial transaction is known as identity theft, hacking, money laundering, espionage, phishing. 10 seconds, time starts now. Time's up. Correct answer is phishing. Identity theft. This is when criminals use someone else's personal information like social security number, bank account details, etc. to open accounts or make transactions without their permission. The key expect here is the unauthorized use of someone else's identity to financially gain. Phishing involves tricking individuals into providing their financial information by pretending to be a trustworthy entity, typically done through emails, texts, or fake websites that look legitimate. While phishing could lead to identity theft, it specifically refers to the act of deceiving people into relieving their sensitive information. Here we have finished the topic. Now part for the summary. Deposit insurance maximum amount we have talked. PSL we have talked about. Non-negotiable on check. Holder in due course conditions. Promising note features. Holder in due course limitations. Fixed account deposit. Examples of recurring deposits. Demand deposit statement. Saving accounts features. Foreign currency only account. Head of Reserve Bank of India. Money transfer engineering. Central Bank of India. Commercial bank categories. Credit to rural people product. Banking operation term. Agriculture loan classification. National stock exchange location. Fixed deposit alternative name. Mandatory lending description, AEPS banking transaction inclusion, receipt for foreign shares in India, direct bank definition, fraud type involving innocent person. So with this, we have finished this topic. It is requested to all of you kindly revise the facts and figures that all we have discussed in this lecture and keep yourself ready for the next lecture. With this note, let's end this lecture and thank you.